Hello traders, Gary Wagner here for Trending Markets on June 30th. We do have the euro dollar again under some pressure today, currently trading off roughly 91 points on the day at 111.36, 111.37 and change, roughly a little bit lower from where we went short. The one thing that we can say is we've seen some extreme volatility within the market. We did have the S&P, Dow Jones Industrial, NASDAQ, all close higher on the day. And after yesterday's tremendous meltdown, in fact, I think on the gold forecast, I talked about the fact that $1.5 trillion in equity was eroded on a global basis as we saw these markets move lower yesterday. So the first chart that I do want to take a look at today is simply a daily chart. This is the euro dollar in standard candlestick format. The one thing that we can see is that extreme move yesterday. What I said, and when you consider the fact that the size of this move, the volatility that we saw in the market has been some of the greatest volatility that we've seen since 2008, there's no doubt yesterday was really a shake the tree and see what kind of fruit falls out. We have returned, of course, to this lower curve that we're seeing within the euro dollar itself. In terms of a straight candlestick pattern, we are getting what's called a dark cloud cover. Of course, right now, day by day, we see changes. Of course, there is a default when it comes to the 1.7 billion that the Greek government needed to pay back to the IMF. However, the key right now is the vote on the referendum that will happen on Sunday in Greece, and we'll have to see how this unfolds, whether or not Greece remains in the Eurozone and continues to use the euro dollar as their prevalent and only currency. Next chart that I do want to look at today is a 720-minute, very similar to the charts that we've been looking at on the gold forecast. The good news is that all of our clientele who are with us on the gold forecast are also with us in trending markets, meaning if you have trending markets, you have the gold forecast. We haven't really let the public know about this new service yet, so I don't have to go and repeat things twice, but we were looking at 720-minute charts there. We're doing the same here. This in Japanese average format, you can see the spike up, and you can really see the size of these candles, and we've got that pivotal candle, and whenever we get that pivotal candle, that's the point in which I'm going to look for the potential for a key reversal, meaning a reversal back down into the lower channel of this chart first. Secondly, when we look at this, our projections on the euro, as you can see, for the conclusion of this third wave, I believe that we're currently in a third wave down, and we could see it go as low as 108. Now, realize yesterday we saw the market actually trade to 109 and change. That was a dramatic fall, but it recouped with a vengeance very, very quickly. That, to me, was kind of saying that whatever is the outcome in the current crisis in Greece, it's really not going to affect the Eurozone, the economy with the countries that are within that Eurozone dramatically. And as I said on the gold forecast, it only accounts for 2%. So we could easily see some more pressure on the euro. In terms of our basic target, I'm looking for a target right now anywhere between 108.50, 109. If we see some support come in there, we'll probably trail our stops down so we can pull profits. We would then go into our fourth wave up, which is a corrective wave. We are in a bear count. And then our fifth wave down should take us back, not so much to parity, but to kind of match these most recent lows that we have seen in the euro when it came down and touched 105. And that was just a couple of months ago. When we take a look at our equities markets today, you know, S&P, we had that dramatic down day, gives us a down week, puts pressure on that half a year mark that, of course, we have reached today. Very, very slight recouping in there. We're certainly below 18,000 here. We're certainly below 5,000 on the NASDAQ. 23 points nominal change within the marketplace. S&P up about 4 points, 4.5 points at 20. $1.55. Lastly, I do want to take a look at crude oil. We have not visited this market in some time, and really the key to this market has been absolute stagnation. When you consider that since May, this market has literally traded within a $2 to $3 range, we are absolutely consolidating within the market. There's no doubt about that. The question is, will this consolidation occur? And then will we see an uptick from there or a downtick? Now, when we move this into a weekly chart, as you can see, here we had the market get extremely oversold. We completed our third wave. Our system here, the Elliott wave system, is really looking for the market. I don't think that it's going to go as high as 70 or 80, but I think that 68 is possible. And then that would conclude this counter wave, fourth wave up. I think that the fifth wave, though, is going to take us to new lows, and we could drift back below 50. We could even drift back into that $40 range. This has been Gary Wagner for Trending Markets. We'll talk to you tomorrow for another update and review. Bye-bye.